Have you ever wondered how a simple rise or fall in the stock market can influence an entire nation's economy? In the intricate web of global finance, the stock market is a pulsating hub, a lively nexus where money, businesses, and dreams converge. Now, you might be wondering, what exactly is this stock market? Well, in simple terms, it's a marketplace where shares of publicly held companies are issued and traded, either through exchanges or over-the-counter markets. But it's not just a marketplace. Oh no, the stock market is the beating heart of a nation's economy. It's the barometer that gauges economic health, the mirror that reflects financial realities, and the engine that drives economic growth. So how does this work? How does the ebb and flow of the stock market affect the wider economy? Here's the deal. The stock market and the economy are locked in a symbiotic relationship. They feed off each other, influence each other, and in many ways, are a reflection of each other. When the stock market thrives, so does the economy. A thriving stock market encourages investment, fuels business growth, and fosters consumer confidence. It's a cycle of prosperity that can stimulate economic expansion. However, when the stock market stumbles, the ripples can be felt far and wide. A falling stock market can deter investment, hinder business growth, and shake consumer confidence. This cycle of decline can trigger economic contraction. But here's the kicker. This relationship isn't just one-way traffic. The economy, in turn, influences the stock market. Economic indicators such as GDP growth, unemployment rates, and inflation can sway the performance of the stock market. So you see, the stock market and the economy are intertwined in a delicate dance, each responding to the rhythm of the other. It's a dance that's been choreographed over centuries, a dance that's shaped the fortunes of nations and individuals alike. To understand this relationship, let's delve into the historical evolution of the stock market. The roots of the modern stock market can be traced back to the late 16th century. It was in the bustling city of Antwerp, Belgium, where the concept of a centralized location for merchants to buy and sell debt and equities was born. This was the first stock exchange, and it set the stage for the financial world as we know it today. A few decades later, across the English Channel, a group of intrepid businessmen established the East India Company with the aim of expanding trade with Asia and the East Indies. To raise the substantial capital needed for such an ambitious venture, they took a page from Antwerp's book and issued shares of the company to the public. This was the first instance of a joint stock company where ownership was divided among multiple shareholders. The idea was revolutionary. It spread risk among many rather than placing it all on one person or group. But these early stock markets were not without their perils. The lack of regulation and oversight meant that manipulation and fraud were rampant. Yet despite these challenges, the idea of the stock market endured. It offered an unmatched opportunity for wealth creation, enabling individuals to invest in and profit from the success of businesses they believed in. The East India Company's success sparked a wave of similar ventures, leading to the formation of other joint stock companies. This gave rise to the London Stock Exchange, which quickly became the center of the financial world. The model of the stock exchange also crossed the Atlantic, leading to the establishment of the New York Stock Exchange in the late 18th century. These early stock markets laid the groundwork for the intricate global network of exchanges we see today. They revolutionized the concept of investment, transforming it from a game for the elite to an opportunity for the masses. From Antwerp to London, from New York to Tokyo, the evolution of the stock market has been a testament to human ingenuity and the relentless pursuit of prosperity. This was just the beginning of what would become a global financial phenomenon. As we moved into the 18th and 19th centuries, the stock market began to take a form more recognizable to us today. The London Stock Exchange, one of the world's oldest, was formally established in 1773. This marked a significant shift from the informal exchange of securities in coffee houses to a more organized and centralized marketplace. Across the Atlantic, the New York Stock Exchange was founded a few decades later in 1812. This gave birth to a new era where businesses could raise capital by selling shares to the public. In turn, investors were offered a slice of the company's future profits. The Industrial Revolution played a monumental role in shaping the stock market during this period. As industries flourished, the need for capital to fund large-scale production and infrastructure projects magnified. The stock market served as a vital platform to meet this demand. It enabled companies to pool resources from a broad range of investors, facilitating economic growth and innovation. This period also saw the introduction of new financial instruments. bonds became a popular means for governments and companies to raise funds, while providing investors with a steady stream of income. The development of futures and options added another layer of complexity, allowing investors to speculate on the future direction of stock prices. As the stock market evolved, so did the understanding of its role in the economy. Economists began to recognize the stock market as a barometer of economic health, reflecting the expectations of future corporate profits and economic growth. It became a place where investment decisions were influenced by macroeconomic factors, such as interest rates, inflation, and economic policy. From the trading floors of the London and New York stock exchanges to the industrial powerhouse that fueled economic growth, the stock market underwent a significant transformation during the 18th and 19th centuries. It shifted from a rudimentary system of trading ownership to a sophisticated marketplace that facilitated economic expansion and innovation. The stock market had now become an integral part of the economic framework. The 20th century was a period of great highs and devastating lows for the stock market. Indeed, the stock market's roller coaster ride began early in the century with the crash of 1929. This catastrophic event, also known as the Great Depression, sent shockwaves across the globe. The market collapsed, investors lost fortunes, and a significant number of banks failed. This crash was a painful reminder of the stock market's volatility and the potential for massive economic fallout. However, the stock market is a resilient entity. Following the end of World War II, the market began to show signs of recovery and growth. The post-war boom led to an era of prosperity, with industries such as manufacturing, automobiles, and technology driving the economy forward. The stock market became a symbol of this economic growth, with more and more people investing in stocks to build wealth. The rise of mutual funds also played a significant role in democratizing stock ownership, allowing everyday people to participate in the market's growth. As the century progressed, the stock market faced two more significant challenges. The first was the dot-com bubble at the end of the 20th century. A period of extreme speculation in internet-related companies led to a market bubble that eventually burst, leading to significant losses for many investors. The second challenge came in 2008 with the financial crisis. Triggered by a collapse in the subprime mortgage market, this crisis led to a severe global recession. Once again, the stock market plummeted, and the world was reminded of its inherent risks. Through all these events, the influence of the stock market on the economy became more apparent. It's clear that the stock market isn't just a place for investors to make or lose money. Its performance is a reflection of our economy's health and our society's progress. It's a barometer of consumer confidence, business health, and economic stability. As we move forward into the 21st century, the lessons of the past can help guide us to a more stable and prosperous future. In the present day, the stock market has become a popular avenue for investment. It's a fascinating world, where fortunes are made and lost every day, where the bold and the cautious converge in pursuit of financial growth. Let's delve into the concept of investing. In essence, investing is about allocating resources, usually money, with the expectation of generating a profit or income. It's a way of planting seeds today to reap the fruits tomorrow. However, investing is more than just about making money. It's a commitment to the future, a belief in the potential of businesses, and an expression of trust in the economic system. The stock market offers a platform for such investments. When you buy a share of a company, you're buying a piece of that company, a stake in its future. You're betting on its potential to grow and generate profits. And as a shareholder, you stand to benefit from the company's success. However, investing in the stock market also entails risks. The value of stocks can fluctuate widely due to various factors like economic conditions, company performance, and global events. This volatility can lead to potential losses. But it's important to remember that risk and reward go hand in hand in the world of investing. Higher potential returns often come with higher risk. That's why understanding the stock market and its dynamics is crucial. It's about studying trends, analyzing data, and making informed decisions. It's about balancing risk and reward, and having the patience and discipline to stick with your investment strategy. Moreover, investing in the stock market also provides an opportunity to contribute to the economy. When you invest in companies, you're providing them with capital to innovate, expand, and create jobs. You're helping fuel economic growth. Investing in the stock market is not just about making money, it's about understanding the pulse of the economy. It's about being part of a system that's constantly evolving, and that has the potential to shape our future. If you found this content useful, Don't forget to hit the thumbs up button. It's a small action, but it goes a long way in supporting us and allowing us to continue creating high-quality content for you. And if you're not already part of our community, we invite you to subscribe to our channel. We regularly explore interesting facts about the stock market and the world of finance. By subscribing, you'll get access to all our latest videos and updates. You'll be joining a community of curious minds, eager to learn and grow together. And remember, your support really helps our channel. It's what enables us to keep delivering informative and engaging content. So whether you're a seasoned investor looking to deepen your understanding, or a beginner just starting out, we're here to help you navigate the fascinating world of finance. Thank you for watching, and remember, knowledge is power. Stay curious, stay informed, and we'll see you in our next video.